Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video is for Tuesday, October 9th, 2012. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, folks, the markets are lower, although slowly grinding higher. You can see again we're now above the 20 moving average here, which means we don't have much resistance above. You have a little bit of a level. If we connect the highs from this pivot to this pivot, that's what we're running into now. If you can bust through that, you have a decent chance of heading towards the 50 MA. Bottom line is, though, the markets are down again. Sunday night, when I did my live broadcast to our members, I said I expected a little bit of a down week this week. Sure enough, that is exactly what we're getting. Yesterday was a slight down day. Today, another down day. And again, tomorrow, we'll see what the market has in store. Now, the key in terms of understanding what's going on here is that you just have to look at the dollar. I mean, the dollar has been strong the last couple of days, bringing up the UUP. Look at that nice trend upwards today. And again, the dollar moving up is putting pressure on stocks. It's always the way it's been. It's always the way it's going to be in the near term unless the dollar absolutely goes into free fall. So that's number one. The other side of the coin is you have a lot of kind of data that's come out over the last few weeks and months, and overall, the market is not rejoicing like it used to. For instance, QE3 Unlimited. The Federal Reserve announced it. It gave an initial pop. That was the top on the markets. I called that. I said it would be the top on the markets. I said they shot their last bullet. Because, again, once you say it's unlimited, there's no way they can do any future QEs because it's already unlimited for QE3. A very unwise decision by them if they wanted to continue to prop the markets up. And I also think that people are beginning to realize that as gas prices hit all-time highs in California and such, that QE policy has inflated the market, but it hasn't shocked the economy back into use. And, if you're just going to inflate commodity prices and such, and hurt the average American, the middle class worker who has to pay for gasoline, and really the economy hasn't created that many new jobs, what exactly has been the benefit of this? Yeah, the market's gone up. Of course, the market's near, 52-week, if not at 52-week highs here, and even multi-year highs. But again, who's the one that's benefiting most from that? And it's easily arguable that the richest Americans, the ones with the most investments, are not the average person who maybe has, 10, 20, 30, 40, 50,000 invested, but those people that have multiple millions invested. So I think it's an interesting little factor here as we trade on in this market to see, again, how the market reacts to this. I think the market is basically saying, show me the economic growth, show me the positives here of all this quantitative easing, because we're now beginning to feel the negatives of quantitative easing, which is obviously food prices and energy prices creeping higher, even when the global economy is in the crapper. All right, so in any case, notice the spiders here. We retraced and we hit that level right there. This line right here, you just pulled back off of it. That's to be expected because that's short-term resistance. I do think there's a chance we get through it into the afternoon session here. But nonetheless, the volume was decent today overall. We've done over 100 million, but a majority of the volume was right here. This little collapse was a beautiful collapse, guys. Beautiful collapse. I actually played this little pivot low right there, made 20 cents on the spiders on the long side. There were actually some good trades today. The action, again, was good in the morning session, and then we got the flush mid to late morning, and then really in the afternoon it's gotten a little quieter, but that's to be expected overall. One of the best setups of the day. You ready for this one? This was a setup that I gave out in the chat room. I even posted it on the Traders Life Forum, which is our social network here at InTheMoneyStocks.com, available to all paying members. And basically what I said was, there's a bottoming tail on Apple. It's right above a gap fill. Gap fill is a key level. This is going to be most likely a good swing trade long, if not an intraday long. Let's take a look at it. AAPL is the symbol. Look at this, guys. Look at that low, look at that bottoming tail, and look at where Apple is now. At this point, Apple was down 15 bucks. $15, folks. 15. And all of a sudden, bottoming tail, Apple is now flat on the day. That is a great setup. That is a setup you dream about. Not only that, but if you zoom out on the charts, look at this right here. See the gap right here? It's a little hard to see, I know, because I'm zooming out so far. But that gap, take a trend line right there. Gap window, gap fill right there. Look at the price. We came right down into the gap window, right above gap fill. Really, to be honest, it didn't officially fill the gap. But the key was to recognize the bottoming tail right there and look at the move up after that. Awesome move. Really awesome move. All right, looking at a couple other stocks. Another stock I'm short and enjoying some profits on today is Google. Google down another $9. This thing got crushed early on. It's floated back up a little bit, but bottom line is it's good to be in the money there on Google, enjoying profit zone. We just want to continue to print money, continue to make money in this market. Amazon, AMZN, let's take a look. Amazon's taking a pretty brutal hit too. It's bounced off its lows, but still down $7. If you go to your daily chart, back below the 20 MA, but still has not tagged the 50. I think it needs to tag the 50 MA before it really starts to get any sort of significant bounce. So look for that in the coming days, in my opinion. Scanning through a couple other things here, guys. Let's just take a look at Chevron and Exxon, and then we'll take a look at Goldman and JPM. Chevron's helping the markets here, up 56 cents. That's a Dow component, so that's one of the positives. And Exxon is also up, not up much though, just up about 9 cents on the day. JP Morgan basically flat, down 9 cents on the day. So again, it's interesting to see the weakness today is clearly coming from the Nasdaq, from the tech sector. All right, very, very clearly from the tech sector, because you're not seeing it in the oil area with Chevron and Exxon, and you're not really seeing it in the financials with JPM just slightly negative, and Goldman's actually up 65 cents. Bank of America down 2 cents, really nothing there either. All right, so it's important to understand where the weakness is, and really of late it's been in the Nasdaq and the Qs. And if you want to see something else that we talked about over late last week, we had a beautiful in spirit of bearish pattern here on the Qs, which is the NASDAQ 100. Look at this beautiful pattern going into Friday. And sure enough, the pattern has played out. And that was a pattern that I gave out to our members on the Hot Charts and Alerts, which is part of the Research Center. And basically, In the Money Stocks has two services, two main services, right? We have the Research Center, which is swing traders and investors. That's for them. And then you have day traders, which are in the intraday stock chat. There's a 7-day free trial for each. The profits continue to grow. One stock I took profits on today, guys, which I had given out in the Research Center in the nightly video, and I give out trades in there all the time. But one of it was QCOR. I gave out QCOR at $19, right over here, 19 bucks. And today it hit a high of 22.48, basically an 18% gain for those of us that took the trade. Think about that. 1 week, 18%. Bam. Okay? That's what it's all about. It's just about finding these opportunities, finding these great opportunities. All right. On that note, folks, I'm going to leave you. I got to get back to work, get back to profiting in the intraday stock chat with my members this afternoon. Keep the Research Center members posted on the current trades that I'm going to take this afternoon as well. But I encourage you to come join InTheMoneyStocks.com. Join the Research Center if you're a swing trader or an investor, and join the intraday stock chat if you're a day trader. Take care, guys.